Welcome back to another video. My name is Kyle and I suck at budgeting. We're going to jump right back into part 2 of the debt discussion that we were having with Charlotte. Enjoy.
So, we have been kind of talking about some of the generally accepted ways to tackle your debt in safe ways. And one of the ways that makes this safe is that it helps to change your habits and your feelings on debt. Now, there are other ways to tackle your debt, and there are some definite traps out there and things to watch out for. So one of them is paid services that offer to do debt consolidation for you. Now, some people consolidate debt, especially with student loans. I hear of it a lot in order to get on payment plans or forgiveness plans. But there are some debt consolidation places out there that are less than scrupulous when it comes to their tactics. And they have you pay lots of fees for them to help you consolidate your debt and get it forgiven. Sometimes what they do is that they will have you stop paying on your debts, and that way you will go into default and they can negotiate better for you. But that is often very destructive for your financial life and your credit. So not really the best option at times. Another one to consider is that if you do get your debt forgiven, that generally it's taxed. So I get people who come in to get their taxes done. I volunteer with the AARP to do taxes, and people come in with a special form that shows that they had some debt forgiveness, and now suddenly that is taxed. And a lot of times it kind of bites people in the butt because they weren't expecting to be taxed on that.
Right.
One of the biggest ones is student loan forgiveness. Unless you are in the public service loan forgiveness program, any other student loan forgiveness is taxed upon being forgiven. So I know people who have several $100,000 worth of debt that they hope to get forgiven many years from now. And I say, well, you better start saving up a fund to pay the taxes on that. Because if you got $100,000 forgiven in 1 year and that goes on your taxes, that's a huge tax burden.
Yeah.
So just something to keep in mind. Any forgiveness, except for that one that we talked about, is taxed.
Okay.
I also really encourage people to try to not roll negative equity into their cars. I have done this. I have been guilty of this in the past, where you're going to go get a new car, or you have to get a new car, and you still owe on the last car. So the salesman says, no problem. We're just going to put that money onto the new car, and now suddenly you're purchasing a car that's $30,000, but you have $40,000 worth of debt on it, and that just never ends well.
Nope.
Never ends well. One of the things that sometimes people do is they do payday loans, which are very predatory. The rates on those are hundreds and thousands of percents, and some people get trapped in that cycle of payday loans. Definitely try to avoid doing that if possible. I have never done payday loans. I'm thankful that I didn't get to that point.
Me too.
But a big one these days are those buy now, pay later, the Klarna, the Afterpay, those things.
Yep.
Yes. And some of them offer the same thing that you get when you go to the store cards, where they'll give you interest free for a certain amount of time.
Yep.
And everybody thinks that they're going to be able to pay it off within that time. They just do. Yep. I mean, we think all rosy, that nothing bad is going to happen, and then life gets in the way sometimes.
Yep.
Even something that, the back in the day, maybe it's not so much anymore, but the invoice would come in the mail, and maybe the mail got blown away that day because your mailbox got hit or something.
Right.
So, and then you miss a payment because you're not expecting that. all stuff that now, because you're using YNAB, would catch a lot of that.
Yep.
Right? So if you have scheduled transactions, we know that, even if the email didn't come or got into spam, I know that that's a due this month.
And I'll just go back to the keyboard. I bring the keyboard a lot because it was a recent thing. It was a lot of money. I spent over $4,000 on it. And I emailed, so when you deal with Sweetwater, they give you your own salesperson. So I've been dealing with this guy for a couple of years. He's been great. He's very knowledgeable. And I said, hey, I'm looking at buying this thing. My daily limit on my debit card is $2,500. What are my options? And he said, we can give you the credit card. We can do a firm, or we can do multiple payments in several days or whatever. And not once did he say you could use 2 different debit cards. And I was like, can I do that? He goes, yeah, sure, no problem. Why didn't you say that in the email where I said, but he was trying to rope me into the credit card, so I was going to get more money out of me. So just be careful with that as well.
Yeah.
If I had gone the credit card route, I had the cash to do it. I just didn't have the ability to give them the money fast enough to do it. So it cost me a couple weeks on getting this, but I mean, whatever. It's okay. So.
And sometimes that is the case where the employee is incentivized, right, to have you finance it for one reason or another.
Yep.
There are other times when they just don't even think that maybe you do have the cash.
Right.
So ask questions is always the best way to do it.
Yeah, he was shocked when he was like, do you want me to charge you now or charge you when it ships? I was like, do it now. Somebody's there, take it. I don't care. So, yeah.
But I think that's unique in these days. My son was doing some renovations on his house, and it was the same thing. They couldn't believe that he had the cash and was paying cash for things. So we're a little bit odd, a little bit unique about how people do that these days. So really what it comes down to is a lot of people are living beyond their means. Now, sometimes I totally understand debt is for emergencies. Debt is for things that were completely beyond your control. A lot of my debt was me living beyond my means, right? I was for better or for worse, whether it was true or not, I felt that I was strapped enough with money that I didn't have the ability to save. But I also didn't want to deny myself.
Right.
So I would put things on credit cards. And maybe if you have 1 or 2 things that way, it's fine. But when you do 10 or 12 things that way, suddenly it's a vicious cycle because now I have so much money going out to debt payments that I couldn't save. And I couldn't save up for emergencies or save up for things. So I am not implying that everyone who has debt is living beyond their means. That is definitely not it. But if that is the case for you, it is something to consider for sure. All right, let's see what else we've got on here.
Did I go too far?
You went a little too far.
Sorry.
So some people, and myself included, have done this, is they move debt from an unsecured loan, like a student loan or credit card debt, where there's nothing held to it, nothing that it's tied into, and they move it to secured loans, either through a HELOC on their house or something like that. This is, in general, a terrible idea because now not only am I taking money that I maybe spent at restaurants and on various things that I don't even have anymore, and now I have made it that I owe more money on my house. So I've moved it from those credit cards, moved it on top of my mortgage. So now I owe more on my mortgage. It's going to take me longer to pay off my mortgage. It's going to cost me more in interest. And I am putting my house at risk because if I lose that job and I don't have my emergency fund in place and my house goes into foreclosure, well, then I'm really up a creek.
Right.
For what? For those restaurants.
Yeah.
And for that vacation, which was fabulous. But in general, moving unsecured debt to a secured debt is a very bad idea. One of the other things that is really a problem with that is the same thing of if you move money from one credit card to another credit card. So let's say I have one credit card and the interest rate is 12%. And then I get another credit card in the mail that says, I'll give you a 0% option here for a little while. Well, I move that money from that one credit card to the other credit card, and I feel like I have done something, right?
Yep.
I feel like I have paid off some debt. I have transferred the debt. So not only, and by the way, I have done this as well. So not only do I feel like I have done something, but the real danger is that now I have freed up that original credit card again. So now when I feel like I can't save up and I feel like I don't want to wait for things, I have the opportunity to now run that original credit card back up, which I've also done. Sordid history with me.
And this goes back to, what we were talking about in our first budget, Beyond the Budget, is that there are mistakes that you can make, but most of them are recoverable. So it's okay, but don't do them.
Well, and that's the thing. I feel like I'm not one of these people who came in and said I was perfect with money from day one. I have made a lot of these mistakes. And yes, I have come out the other side despite it. Now, have I made any of these mistakes within the last, 15 years of getting my finances in order? No, none of them.
Yeah.
But part of the reason is because I have the emergency fund and the sinking funds that we talked about in the previous episode. So that is very dangerous because now suddenly you can wind up with twice the amount of debt that you had. So, and same thing if you move debt from your credit card to your house. Now you run that credit card back up again, and now you have that debt and the house debt. So, the biggest thing is that all of these methods that we're talking about here at the end don't change your habits. So using YNAB actively changes your habits and makes it that you will be able to handle this much better than people who are not.
Yep.
One last option is bankruptcy. Really should be considered a last resort. Is really just destroys your whole credit situation for a long time. I understand that some people get to the point where they need to do bankruptcy, but it definitely is a last resort and something that you should think about very long and hard before you go down that road.
Yep.
All right. So I have some questions for you.
Okie dokie.
So I know in previous episodes you've talked about wanting to get out of debt. So I guess my question is, how did you decide to get out of debt, and why?
Are we talking about my current debt or
any
debt in the past?
Any debt you'd like to share?
It, for the most part, it came down to me wanting to retire faster, and I felt that if I could eliminate more bills, it would be easier to retire.
Okay. Fabulous. So I don't think that maybe what you did necessarily fit into either the snowball or the avalanche.
Not
but
really, no.
How did you have multiple debts at once that you were tackling, or did you really have one at a
one
time?
point I had 4 credit cards and 2 student loans.
Okay.
And I just paid them off. Honestly, there was one credit card that I pulled from my 401k to pay off. My financial advisor at the time said it was a good idea, so...
Financial educator. Oh, financial advisor. Yes. And he's not your financial advisor anymore.
No, he's not. So yeah, I mean, it was $12,000, I think, on the credit card that I paid off. But I was at a point where I just kind of wanted to be done with it, and I didn't want to put the work in to do it.
Well, that's interesting. Okay, didn't want to put the work in to do it. We make the best choices we can at the time, right? So at the time, that was the best choice. And, indeed, you ended up getting out of debt, right? But
and I've not gone back into debt. Well, I mean, car, yeah, but I mean, no more credit cards. I don't own a credit card. So.
But I do think that if we sit there and say, okay, how many years ago was it that you got out of debt from the credit cards?
5, maybe.
Okay. So if we think about that $12,000 that you took out of that 401k, what it would be now, what it would continue to be in the future, that's a big loss.
Yep.
So we should have added that onto the list of possible pitfalls.
Yeah.
In general, not a great idea. And some people say, well, I'm going to take a loan from my 401k. Still not a great idea. I know you pay the interest back to yourself and all that other nonsense, but in the end, the growth has stopped on that. And in the last 5 years, in general, the market's been doing pretty well.
Yep.
But I have made some less than optimal choices along the way. and we come out the other side.
Mm-hmm.
So you mentioned that you don't have any credit cards right now.
Yes.
So why are you taking that approach?
Because I don't trust myself. I know that if, like, so again, go back to this, if I had taken out a Sweetwater loan or card or whatever, I'd have 3 more keyboards here and a ton more equipment. Have I bought more than just this? Yes, I have. I mean, I bought some pedals and stuff that I needed, but I would have a ton more stuff and it'd be a lot less money in my pocket. So, and that's one of the things. It's a lot easier on a credit card to just spend, and it doesn't hurt as much. So yeah, that's why because I don't trust myself.
I agree. Once we got out of credit card debt, I did not use credit cards for a long time because I did not trust myself, and I feel like now with YNAB, you probably would be fine with it.
Yeah, it probably would be.
Right, but is it changing your quality of life to not have a credit card?
I think it is. So
for the better or for the
better,
worse?
For
okay,
the better, yeah.
Well, that's good.
Yeah.
So do you think you will go back into debt for future purchases?
It depends. So go back to our last episode. It really depends on how fast I come up with my emergency fund and whether I have an emergency before I get there.
Okay.
I don't plan. So we've talked back and forth about getting a credit card to cover the emergency stuff. At the moment, I don't see the need to do it. It kind of helps that the bank that I was looking at is in New York, and I don't have direct access to. So I use a credit union based in New York still. So like when my debit card gets compromised, I have to wait a week to buy stuff, which kind of sucks. Which is why I have 2 debit accounts, 2 checking accounts. So I've got 2 debit cards. So when one gets compromised, I've got another one to buy stuff with. Because for a while I only had one, and there were several times where it was compromised, and I would just sit there and be like, I don't know what to do. Can't get money, I can't do anything.
This is what I love about you, Kyle. You won't get a bank just in Ohio. You have to keep the bank.
They all
in
charge
New York.
fees, and I don't like them. So so yeah, I don't know. But I used to be able to just drive down to King Cullen and grab a new debit card and be like, all right, cool. But now I can't anymore.
Well, I think the second debit card was smart, just in case.
Yeah.
So. Because that's the thing. If you are not using credit cards, but you also don't have as much of an emergency fund as you would like, you kind of are caught in that gray area of problems there. So.
Yep.
All right. All right. So, you know that we love to give some homework to the viewers.
Yep.
So today's homework for you guys is just to consider what kind of role debt plays in your finances. So good or bad, however you do it, just kind of think about and do things intentionally. So instead of just kind of letting your finances run themselves, you can make an intentional decision to say, I do plan to use debt, or I do not plan to use debt, or I'd like to pay it off, or I'm happy to keep it forever. So just kind of get you guys thinking about what that role is, and just in general, what your opinion is on debt. So again, this is personal finance.
I was just about to say the same thing.
You get to tackle it however you want. What would you like to say about it?
That's exactly what I was going to say, is that we're not telling you what to do. It is your decision. We're just trying to give you both sides of the coin so you can make your own decision and make it the best decision.
And as we've said before, we're not financial advisors. We're just trying to help educate people out there. So don't take any of this as advice. If you would like to tackle your debt, you can look into that resource that we showed you, the Undebt It. Hopefully we can put that maybe in the...
Yep, I'll put it in the description. Absolutely, yep.
So that you can access that. And if that doesn't work for you, there's lots of other options out there. But just kind of be wary of how you go about handling paying off debt, because there are some bad actors, I hate that expression. Why did I use that expression?
I'm in cybersecurity. That's all we talk about is bad actors.
All right,
Drives me nuts.
I'm going with it. There are some bad actors out there that are trying to benefit off of your problems and your needs, and sometimes desperation. I've been there too. So just try to figure out what will work best in your situation.
One thing we didn't really talk about was actually like credit score and I mean this probably opened up a giant can, but you know there are a lot of people who say you need to build credit to buy a house and all that sort of stuff. I'll tell you this, that my credit's over 800 and I haven't had a credit card in 6 years. So
there you go. Yes. So when we go back to thinking about the gurus that we talked about, Dave Ramsey is big on that you don't need a credit score. And that is one of the things that people vehemently disagree with him on. So yes, in general, what Dave Ramsey says is the only reason you need a credit score is to borrow money. And because he doesn't want you borrowing money, then you don't need a credit score. He does talk about manual underwriting for mortgages and things like that.
Yep.
But a lot of the times when people say they need a credit score for something, it's usually, oh, I need a credit score to rent an apartment. I need a credit score for my job. Through personal experience in my own family, we have found that most of those things are not true in most of the cases. Sometimes people say, I need it for insurance. To get my insurance rates down. So those are all valid points. But in general, I think most people agree that credit scores are important. And some of those debt consolidation things we were talking about can really tank your credit score. If you go the debt consolidation route where they have you stop paying, or if your utilization becomes very high, or if you have taken out lots of new credit cards to try to do balance transfers, it can really mess around with your credit. But in general, I feel like most people want a good credit score. And if you have a low credit score, it prevents you from doing some of the borrowing that people would like to do. So I don't know, what are your thoughts on?
I think credit score is voodoo. It's kind of like blood pressure and heart rate. So
you know, it's funny because my friend's daughter once announced that she thought that recycling was fake. So that always makes me laugh. But it's the same thing with credit scores. And it's like they won't tell you how they arrive at them specifically. And sometimes...
They have a magic 8 ball. They just shake it. Oh,
well,
$6.92.
And if we think about that, when we're talking about the payoffs, when you pay off a credit card, your score can go down, actually. When you close a credit card, your score can go down. So there's a very delicate sort of balance there. But as somebody now who you have your mortgage and, you know, recently paid off your car, and so that alone has been enough to sustain your credit score at a very excellent rate. So yeah, it's definitely a piece to the puzzle. Thank you for bringing it up.
I think that's all I got.
That's all I have. So what we're doing is we're just kind of working our way through these topics. So next up, in our next episode, we'll do some things that are a little bit more fun than these boring beginning episodes. But you really need that solid foundation before you can start doing some of the sexier things when it comes to finance.
Cool. Thank you so much for watching. We'll see you next time. See ya.